Hello traders, Chris Capre, secondsguysforex.com, testing the sound on the mic, check 1 2, check 1 2. How's everybody doing today? Good, fantastic, good to have you guys here. Rigadonis, I think I know who you are, one of my course members, good to see you. Actually, a few of my course members are here, so good to have you guys here. Gabriel as well. All right, fantastic. How's traders doing today? How's trading been for you guys? Montes, good to see you, one of my star reversal traders. Market is really moving today based on what's been going on lately, especially with the whole Greece thing. It's funny, Greece is trying to stabilize themselves from one of the worst financial situations they're in. And how do they go about doing it? By electing a combination of some neo-Nazis into the parliament, some prior communist members of the party. Somehow they think that's going to work. I'm not really sure. Let's elect two failed types of governmental systems back into the fold, bring them into parliament, and use that as our model for getting out of this thing. I really have no idea how they plan on that working, but, I think it's more of a reaction vote and more of a protest vote than anything. But, hey, in some sense I understand. All right, great. So, good crowd here today, guys. So, today's lesson is going to be recorded. Aviary says, Chris, I'm actually a price action student too, quite recently, actually. Fantastic. Well, good to have you there as well. So, price action trading, we're going to be covering a lot today. I'm going to spend a little bit less time on the story today, and more I want to cover a couple things that's been going on with Dow lately. I've been trading Dow. I've been pretty active on Dow. As you know, I've generally been more of a bear on Dow lately. And so I'm going to be covering Dow, two trades that I took recently in the Dow, which actually offered three really good setups. I missed the second one, but the third one was there for the taking as well. I even blogged about my most recent play on the Dow just last night. So hopefully you guys got to get a piece of that as well. It's come off really, really nicely. You'd be up over 100 plus points basically if you took that trade. So yeah, I'm going to be talking about Dow. I want to be talking about gold and the general perspective that you want to be looking at on gold from a technical perspective. And then I'll be talking about a short-term trade on Kiwi. And then if I have time, I'll cover Euro and a few of the other things as well. So we're going to get into all that. But let's just briefly get into as you know, I generally like to start the webinars off talking about a particular aspect of trading that doesn't have to do with chart reading strategies or anything like that. Because the bottom line is that if trading was all about strategies and information, many of you would be profitable. Many of you have strategies that probably work and are profitable, but you're not profitable. And so why is that happening? And part of probably the number one reason why most of you are not profitable right now is the answer is in the mirror. And more than likely the answer is you. And, generally when somebody says, hey, the answer's in the mirror, it's generally not a comfortable way to say it. But I would be willing to bet that the one thing that's probably holding you back more than anything else is you. And so I generally like to spend a few minutes talking about that. Then we're going to really hammer into these charts that I want to talk about, some great setups from a price action perspective, how I trade them from a pure price action perspective, entry, exit, stop limit, the whole thing. Questions are always welcome as usual. Please keep the questions tailored to the subjects that we're talking about, especially since this is being recorded. So, we try and keep things focused. Is there a good thing to know ahead of time, is there another speaker after me? I generally need to know this so I don't run over too long or anything like that. Yes, no, there's no speaker after this? Okay, fantastic. Now, Maud and Adinda, do you need me to end in the 1 hour time frame, or can I go a few minutes longer, just so I know ahead of time? There's no one just after you. So does that mean I can go a little bit extra longer and that's okay for the recording? You're okay with that? Yes, no? We can do 1 hour full. Okay, we'll do 1 hour from now then. So we'll go a little bit extra then, a little bit over the thing. All right, great. So real briefly, just get into the story and that's it. So I recently wrote an article on forexstreet.net and it was called A Question to All Traders. And many of you had participated in that. For those of you that are not aware of it, is the main thing or the main question in there that I proposed to traders was, what would you feel like if you were a highly successful trader? And what I'm really talking about is many of you probably have a full manifestation of what you would like your trading to be. You know, you like to be trading X amount of dollars. Maybe it's full-time. Maybe you really like your job and you just want to trade part-time. Maybe you're a photographer who loves photography and you just want to be able to trade on the side a little bit here and there. And maybe you still want to be a photographer no matter what. Maybe you want to be trading $10 million, $100 million. Many of you have an idea of what the full manifestation of that is. You know, it would probably mean something in accuracy. It would probably mean, you know, a certain amount of money, but many of you probably have that idea. And if I had to guess, 95 to 99% of you are probably not living that right now. Now, that doesn't mean that 90% of you are not profitable. About 1 in every 4 of you is profitable based on statistics that are done on brokers, both in the U.S. and globally. So 1 out of 4 of you is profitable, but probably within all that, maybe less than 5% of you are really living the dream in the sense of you are trading the full manifestation of what you want. I'll confess, I'm not trading the full manifestation of what I want, but I'm a pretty big dreamer in the sense of, not dreamer, but I have pretty big dreams and things that I want to fulfill. And my full manifestation is that our fund is managing over $150 to $500 million. So we're definitely not there yet, but we're getting there. We might be able to break the 100 million barrier this year if we get this new funder that we're looking to work with. So, but that is my short-term 1 to 3 year goal, basically. And then I have a larger goal on top of that. So I'll admit right now, I'm not trading that in the full manifestation of it, but I am constantly evolving towards that, and I'm constantly growing. And each year, everything in terms of trading grows and goes to the next level. You know, a lot of people say the hardest thing that you can do is to get from here to there, but that's actually not true. Once you get to a level of consistently profitable, it's actually even harder to maintain it. So the first barrier is generally the toughest, but then even after that, it takes a lot of effort to maintain it, an immense amount of effort and discipline. And so anyways, the question was, what would you feel like if you were a highly successful trader living the full manifestation of the dream? And many of you had participated in this. I got about 20 or 30 comments on it. Some of you didn't fully participate on it. But many of the answers were interesting. And the reason why I asked the question was, the question was designed to have you dig into what it would feel like and what you think you would be getting out of it if you were living these dreams. If you were living the dream or you're living the full manifestation of your trading vision for what you want to be. And many of the answers were incredibly revealing. And I'm going to be talking about this. I haven't told FX Street yet about this, so now's a good time. But Maud, and Vicky and Adinda, I'd like to be doing a webinar specifically on this. But what was interesting is that a lot of people don't realize that you probably have subconscious or unconscious limiting beliefs that are there present while you're trading. And there was a recent article I read from another person in the market who, you know, they have a service and everything like that. And their main article was about positive thoughts and positive reaffirmations. And they kind of made it sound like if you make a bunch of statements, a positive statements, that all of a sudden you're going to become a better trader. And here's the thing about it, and this is my whole contention with about positive statements and positive reaffirmations and things like that. It's kind of like the whole secret. My contention with that is positive statements and positive thinking are necessary but not sufficient. They alone will not make you a professional trader. If you don't believe me, try it for the next month. Try every single day, 10 times a day, to make a bunch of positive affirmations about your trading. I'm going to be a professional trader. I'm going to trade 85% accurate. I'm not going to make any mistakes. I'm always going to use proper risk management. I'm always going to do this, this, and this. Try it for the next month. And I'll bet many of those mistakes that you currently make will still make. Why is that? Well, first of all, the brain just doesn't change because you make a bunch of statements. You have neurological pathways that are very ingrained into your brain, and it takes a lot of effort to unwind those or change them or adapt them. And if you just make a bunch of statements to yourself, it only works on it's basically working on the conceptual level. And the brain doesn't program itself based on just concepts alone. The brain has a much deeper way of wiring itself. And if you think about it, if you've had conditioned beliefs governing your ideas about wealth, money, success, trading, discipline for the last 30, 40, 50 years, do you think making positive statements is just going to unwind that and reprogram your brain? I don't think so. You got to remember, your brain is so interconnected, you'd have to rewire many aspects of your brain just to change one particular behavior. And so it's not just accepting those things emotionally also isn't going to fully do it. There has to be a much bigger change that happens on a subconscious and unconscious level. If you believe that positive statements will fully change your life, change your trading career, turn you into a professional trader, make you a billionaire, try it for the next 1 month, 6 months, 9 months, and I guarantee nobody in here will be a billionaire just from making that statement. Why? Because the statements alone are just conceptual. None of those statements will mean anything if you do not take massive action. So, if you think about it, try and visualize, try and just mentally say to yourself, every day for 6 months, I'm going to be a billionaire. 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 I'm going to, be able to buy a $1 billion house or whatever in the next 6 months. Maybe 1 in 100,000 of you will be able to do that. Maybe 1 in a million, maybe 1 in 10 million. Why? Because statements alone don't just work. You can't just change your mind and change your life through positive statements. You have to do it with massive action. Once you start to do it with massive action, then those statements will start to take root into your brain, because the action will create an experience. It will create a feedback loop. It will create a response. It will create an understanding. And as that happens, you'll start to build new circuits. But you'll have to do that repetitiously again and again and again and again to strengthen those statements to the point where they become habit, to where they really do change behavior. So, the whole thing about positive thinking will change your life, it's a start, but it's the very, very beginning. It's the very, very beginning of really changing your mindset, changing your conditioned beliefs about trading, about being disciplined, about success, about handling more money than you're used to, about following your trading plan, filling in your journal, all these things. Positive statements are the very, very beginning of it, and it's such a small step in much bigger steps. And so if you really think positive statements are really going to do it all, you're delusional. Again, try and tell yourself, I'm going to have a $10 million house every single day for the next month, and I guarantee 99.9% of you who hear this webinar will not manifest that. If something only works 0.1% of the time, it's generally not something that is really that powerful. The brain and your subconscious and unconscious require more potent things than positive statements alone. Again, positive statements are necessary but not sufficient. The upside of it is that by making a bunch of positive statements about your trading, chances are when your mind is thinking, instead of that thinking energy going into negative statements, it will go into positive statements, and it helps to redirect some of that energy. That's part of it. But the bottom line is, if you have subconscious or unconscious limiting beliefs or negative habits, they're not just going to all of a sudden unwind themselves by some positive statements. If that was the case, everybody would be a completely new person by making these positive affirmations. Everybody would be completely different. It would just work across the board, but it doesn't work that way. So with that being said, I don't want everybody to become delusional about the idea that you just start making a bunch of positive statements and all of a sudden your life's going to be different. It requires massive action on your part. Again, necessary but not sufficient alone. So with that being said, does that all make sense? I mean, many of you have probably tried that. How many of you have tried making positive statements about your trading, about being disciplined, about following your trading plan, following your journal, and how many has that really produced massive changes by itself? Probably very few of you. And what was the one difference that really allowed you to make those differences? It was the action. It wasn't the statements. Again, the statements are just conceptual. It's a very surface level of working with the mind. And so I'm going to be doing a webinar with FX Street in about a month, because I've been doing a lot of work with somebody on a very personal level for a long time on how you can reprogram your mind, how you can reprogram it to eliminate and reduce these subconscious, unconscious, negative limiting beliefs. I've gone through this program and then some. So, that is what I'd like to be talking about. And that was the whole point of the question I posed out in that post on forexstreet.net, which was, what would you feel like if you were fulfilling the full manifestation of your trading vision? I want you all to think about it between now and then. Maybe write down your answers. Maybe comment them on the forum and add them to the forum, because I'll be using that information to help show you a different way to be looking at the mind. All right. So does that all make sense for everybody? Yes, no, no sense, some sense, complete sense, BS sense. Doesn't matter to me. Okay, great. Couple quick questions. And then I really need to get into price action here. Boyke says, do you visualize? Yes, I do visualization every single day, a lot. And part of the reason is because your brain is actually more wired to respond to visual stimuli stronger than others. If you think about it, what's your most powerful sense as a whole? It's your vision. About 70% of all the data that your central nervous system takes in is visually oriented. Your brain is actually wired to give more emphasis to visual information, and therefore it has stronger roots inside your brain. So visualization is absolutely critical to helping to reprogram your mind, but again, that's only part of it. Jack says, can filling a journey make you $1 million? I don't quite understand that question. Filling a journey. I don't understand that. Maybe you can rephrase that. Pablo says, what do you mean with actions? Very simple. I have a trading journal. Let's say I'm not filling out my trading journal. An action would be to build a better habit, the habit of discipline of filling out my trading journal. Nothing is going to be more powerful than actually filling out the trading journal. The action is filling out the trading journal. It's an actual action. So hopefully that makes itself or explains itself. Ganser says, so what should we really do to reprogram? Because all we know there is that probably. Ganser, come to this webinar in a month from now. And that will be the first time I'm actually expounding this work I've been doing for a long time. So come to that. Okay. STG says, rewiring the wires ain't easy as it sounds, though. Need motivation, loads of hard work for sure. I'm looking forward to the articles on this. Absolutely, motivation helps, because there's going to be times where it's not fun, it's not exciting, and that's going to be one of the most critical times. Do you still follow the discipline or the actions or do the work that you need to when it's least motivating and least exciting, when you feel like crap, when you don't want to? It's all very critical. Okay, Al says, will that webinar be recorded? I'm sure it will be. All right, great. So let's get into price action. So with that being said, I want to start looking at the Dow. If all of you remember from my webinar that I taught, the monthly webinar I taught, one of the things I talked about from a price action perspective was how to identify exhaustion or climax bars. And for those of you that weren't there, you can go back, and FX Street has, in fact, I have the link for you to my author page. You can see monthly webinar. It was part 1. Part 2, you need to be a premium member, but part 1, it was in part 1. And I talked about how do you identify climax or exhaustion bars. And these are bars that tend to come at the end of trend. They usually mark overextension. They mark that kind of like a blow-off top. They tend to say, hey, okay, the last of the people have gotten into the market, so that helped to push it. You know, there was a huge amount of imbalance to one side or the other. And these tend to mark reversals of trends, or they tend to mark the end of trends of sorts. And I talked about how I use that to identify a trading opportunity in the Dow to reverse it, because I'm pretty bearish on the Dow. Even though it's been trending up, I'm still pretty bearish on it for other reasons. Well, let's take a look at one of the things that the Dow was presenting itself with. And then I'm going to show you how I trade it from a price action perspective. So Dow has been climbing for all of 2012. Very stable relationship above the 20 EMA, rejects off it, pin bar, breaks below it, but then the buyers say, hey, we'll take this as an opportunity to get back in on the cheap and push it back up. And we know they use this as an opportunity because they bought it the next 5 days in a row and immediately got back above the 20 EMA, rejects up to 20 EMA, pin bar, and climbs. Now, if you remember the 3 qualities of an exhaustion bar, an exhaustion or climax bar should come after a long trending period. It should be one of the largest bars in the series, and ideally the largest bar, and it should come at a clear resistance level or after breaking a clear resistance level. And so we talked about how that tends to represent a good trading opportunity to reverse the market. Well, we see this here, that the Dow makes new highs with a pseudo exhaustion bar right here, and then it forms a triple top. So it forms a nice little triple top and keeps rejecting off of it. Now keep in mind, this is the first time the entire year that the Dow has A, triple top, B, needed 3 attempts to get past the level and failed to do so. Every time it ran into resistance, it was always able to make higher ground. But it fails. Triple top fails and then sells off 500 points. Largest sell-off of the entire year. So obviously there was some unwinding of the longs. Obviously this was a clear resistance level. Obviously the sellers were able to stop the current bull trend and reverse a lot of the imbalance in order flow that was already in the market. So this level is a clear gravity point for the market. It created a strong reaction before. It stopped the uptrend, so we have to watch it again. Well, look what happens. The market finds a base and then starts to climb again. And does so pretty strongly. Does so very aggressively. Well, it continues to march on, but you can tell there are sellers present in the market because they're pushing back with some decent strength. Well, look what happens after it finally makes its way up to the same level again. Gets to the level, produces a doji, and then right after that produces an inside bar. Now, if it produced a doji, but then had a strong trending bar after that and broke out of it, I would feel a little more confident that the breakout was probably going to be legitimate. But the doji by itself represents a little bit of indecision, hesitation, but then to follow it up the next day with an inside bar, smaller range than the prior bar, tells me that now we've had 2 days of hesitation. The market and the bulls are really unsure that they are going to be able to break above this level here. We know this is a key resistance level here. It's rejected before, and the market is really hesitant above it. If this was a strong trend bar and an inside bar, again, that would have more evidence that the upside was going to be broken. But we didn't see any of that. So with that being said, this is really communicating hesitation up to the level. Now look what happens on the next candle. The market breaks, makes a new high, and I'm pretty sure trapped some traders long on this one here who took the breakout, but then shortly closes back into the range and just below the low, or just below the resistance level here. Now that should have been a warning sign with all the hesitation, false break. We've had 1, 2, 3, 4, 5, 6 days of climbs in a row, gains in a row, 6 bull candles in a row, and then we have a false break of the level. This is where it gets interesting. If we zoom into the 4-hour chart, we can see this exact same price action, but now we get to see it in a different perspective. If you remember, again, what was I talking about as the 3 characteristics for a exhaustion or climax reversal bar? It has to have tend to be the largest candle in the series, needs to be at the end of the series, should be after a strong trending move, either up or down, and C, should either happen at a resistance level or most ideal, happen on the break of a key resistance level. The reason why that's useful and potent is if we break a key resistance level, this helps to set the trap because new traders that are trying to get into this trend and chasing this trend are buying on a break. They're taking the breakout. So they take the breakout, they buy above this level here, the market continues to climb, they think great bar, good clearing distance, very strong bar, good breakout, they're thinking great, we're in profit, and then all of a sudden the market reverses right back to their entry and they're thinking, hey, wait a minute, hold on a second, what happened here? Now they're worried. Anybody who got in just above this level is trapped and they're now in the negative. They're trapped long. So they are now under pressure to have to exit this position. If this trend, you have to ask yourself in these situations, if this trend was so strong after such a big breakout bar, why did the market do an immediate about face? Why did it all of a sudden have a decent pushback to the downside? Why did it all of a sudden come right back to the same level here instead of continuing on? What happened to all the buyers that were there on the close of this candle? What happened? All of a sudden they're gone. So this should automatically be putting red flags into your thing. I prefer breakout retests that actually break and make some distance and then come back. But if they immediately push back, that immediately brings up concern for me. It tells me that they all of a sudden were no longer present in the market, even though they were very strongly present on the breakout. So it should be a warning sign. Now look what happens right after this. Instead of the buyers coming back in at this level and saying, hey, we're back our entry, let's push it back up, what happened? Hesitation. We see hesitation, pause, pause. We don't see buyers coming in pushing real strong. We see weak candles from the buyers after a strong selling candle. So what does that tell us? It tells us we have all the ingredients for a false break, that the buyers are not re-entering the market, even though they could get back in on the breakout level. They're not re-entering the market, and that now the market is being slowly pushed back by the sellers. The sellers are starting to take control. So can everybody see from a price action perspective how this is a climax or exhaustion bar? It has all the ingredients in play. Yes, no? Can everybody see that? All right, great. For those of you that are curious, I wrote a really good article on climax and exhaustion bars here, which you can take a look at, where I go into them really thoroughly, kind of get into the nitty-gritty details, give a ton of examples. So feel free to check it out. All right. So now we have a situation where the market is now reacting to a level which, instead of treating it as support, it's now treating it as resistance. We know it's treating it as resistance because the buyers are getting hemmed in here. We have a false rejection here, but the sellers are able to take out the lows of where the buyers found support on an intraday basis. So the two selling candles are now starting to dominate the price action. So we have a clear resistance level. I'm going to tell you exactly how I trade it from a price action perspective. What I use is my entry, exit, stop, limit, the whole thing. I'll confess, at this point, I wasn't in the market. I saw this and said, hey, wait a minute. Okay, we've now had some good confirmation after this candle right here that the market is now starting to turn over to the sellers. If I have a trend that it's in place, particularly for an uptrend, generally before I like to get into that uptrend, I generally like to see either a strong one-bar reversal pattern, such as a pin bar, or I like to see a very strong two-bar reversal pattern, such as an outside bar or an engulfing bar. Engulfing bars are more powerful than outside bars, but outside bars are still powerful. I generally like to see a very strong one-bar, two-bar, or three-bar pattern to get into the trade. If I don't, then I'm looking for one key thing. I'm looking for a failed test of the same highs or a lower high. The failed test of the same highs gives me confirmation that that level is now being defended by the sellers, and a lower high will give me confirmation that the sellers are actually getting more confident and more aggressive. Why is that? Why are they getting more aggressive on a lower high? It means they're selling at a worse price and they're feeling more confident to get in at a worse price. Now, great confirmation for me is a lower high in combination with a one-bar, two-bar, three-bar reversal pattern. If I have all of those, then I'm in really good shape. At this point, I don't have a failed lower high. I mean, I can kind of treat this as a lower high, but I wouldn't consider it a lower high because the bulls didn't retake the market, retake control of the market, make a second attempt and failed. Well, look what happens after this. The market rejects off the 20 EMA, the dynamic support, forms a pin bar. If the bulls are going to get back in, this is kind of their last chance to get back in and make a second attempt, a second stab at these highs. And if they don't take them out, then the bears are going to say, we have control of the market. You failed to take us out at our entry level. We now dominate the market. And then they're going to start to take over the market and cause a reversal. So we have a pin bar trigger off the dynamic resistance here. The bulls then start to take control of the market. And look what happens. They start to bring in bigger candles than the bears. They find support again off the dynamic support. But then they come back to the same level again. And look what happens on the next candle. The next candle breaks above it, but then starts to break back below it again. So to me, this was my trigger. The fact that it rejected, it stalled at this level here, tried to make new highs, and failed to actually hold those highs. Where did I get in, and what did I use as my trigger for this one here? To me, the level was my best chance to get back in an entry. I could have waited to get back here, which is ideal, because if I get back here, I have very low risk and very high reward. You know, I have a lot more upside to actually manifest. But the market didn't show me here that it had the potential to get back to these highs. And the fact that this candle stopped on this level, this candle climbed above it, but then started to come back below it, all communicated to me that this level is now the new line in the sand. So I have my lower high in place. So how did I get in it? I literally was watching the candle real time. It went up, rejected off 1330. As soon as it got about 15 points below this level, I said, I'm getting back into the market. So my little entry was here. Hey, if we got back below the low or below the close of this candle, then that told me that the sellers are starting to take control. So I literally got in at right about there, just a few points below that there. What did I make as my stop? What did I make as my target? What did I make as, profit taking? I'm going to unfold that right now. I had two choices on the stop. I could have gone for the full risk, the most conservative, which would have been out here. And if I look at this, 13,281 to 13,388, it's about a 60-point target, a little 60-point stop. So 60-point stop, that's one option. Option number two is put my stop above these rejections here. It's a lot more aggressive, and it doesn't leave me too much breathing room. The upside is that if I do get away with the stop, I get a lot more to my bottom line. But to be honest, I didn't feel totally confident that I might not get shaked out here, maybe trapped, maybe a fake out or anything like that. So I just said, look, I'll put it just above this here, a few points. I have a nice 60-point stop here. Remember, what's the first thing that a professional does when they look at a trade, they measure their stop first and then target second. You know you're an amateur trader is if the first thing you're looking at is your profit first and your stop second. So this is why I start by looking at the risk first and then profit second. Why? Because if you're looking at profit, it will tend to create a bias and cause you to miss the downside risk. But if you address the risk right off the bat, then you're clearly looking at the downside, which is the most important to cover. And so at that point, you're saying, okay, does this make sense based on my overall risk in the market? So 60-point stop, what do I need as a minimum target? I need a minimum 120-point target. So where would that put me? If I'm in at 13,281, that would put me at a minimum 13,116, right about there. Now, is that a reasonable target? Yeah, seems pretty reasonable. Let's zoom back a little bit. Doesn't it seem like I could probably get a little bit more out of this? Sure. Yeah, this is a decent level. This was a rejection here before the blow off top of the exhaustion bar. But I honestly felt like I could minimally get back to here before I could need to exit out or before buyers would probably get back in the market. So I literally set my target 150 points, 60 point stop, over 2-to-1 R-to-R ratio, and that's it. And how did everything play out after that? Sellers come in, but they start to show some hesitation here. The good thing about it is that after this, they started to treat the 20 MA as resistance, not support. So what does that mean? Role reversal of how they relate to the 20 MA. That's confirmation for my trade. When they've been treating the 20 MA as support for a long time, since way back here, 24th of April, all the way up to May 3rd, over a week and a half, and then now they start to treat it as resistance, that's confirmation from my trade that the market is now using the upside more as resistance than they are using those levels as support to get back into the market. They've changed their relationship to how they're looking at these levels here in the dynamic support. Market then pauses, and either there's buyers that are going to come in and push this and take me out, or where the sellers are going to use this as an opportunity to get back short into the market here. And I'm saying, okay, I'm already in profit. I haven't hit my target yet, but bottom line is I don't have confirmation that the buyers are going to take control of the market because they have yet to do so far. And look what happens. Uses 20 MA as resistance one more time, sells off, bam, right to the target, done deal out of the trade. So that is how I traded it from a price action perspective. Did I adjust my stop at any one point in time? No, I didn't on this one here, mostly because I didn't feel confident putting it right up here. I wasn't fully sure that they were going to treat it as resistance. I didn't have a second confirmation of it. By the time I got the second confirmation, the thing just went to my target, so there wasn't any time for me to adjust it or anything like that. So that's how I made the trade from an entry, stop, and limit perspective. Does all of this make sense from a price action perspective? Yes, no? No, yes? Okay, so again, where did I short it at? I shorted it just below the close of this candle right over here. Let me zoom in. This candle closed here right at an area that it was considered now resistance. When the market pushed up above it but then failed to maintain those gains and got back below the close of this, that's where I shorted it. Ideally, the market would have come back to this level and then given me an engulfing bar or a pin bar rejection or an outside bar, but it didn't give me any of those. And I felt like, hey, this level is obviously now holding it. The sellers are getting more aggressive. They feel more confident to sell at a lower price, which is a worse price for them, especially the people that got in late. People that got in late that didn't sell up here, they now have to sell at a worse price. So, but the fact that this was holding all communicate to me that this is the line in the sand, so I need to be getting in here. I have my lower high in place. The first bar that rejected off of it did produce an engulfing bar, so that bar by itself was confirmation that the sellers were now in control. So hopefully answers your question. Some questions here. Gangster says, how about the piercing inside bar? A piercing bar has to pierce more than 50% for it to be a piercing bar, and this one right here didn't do it, so I didn't consider that valuable enough. Inside bars by themselves are not necessarily the best reversal signals. They're better with trend signals than they are reversal signals, so if you do, you have to add confirmation to use them as a reversal. So hopefully answers your question. Davidia says, what time frame is this you are currently using? It's a 4-hour chart, so hopefully answers your question. Shuaige says, where do you confirm the sell here? I confirm the sell here after rejecting here, which confirmed the lower high. If you remember, what are one of the things I'm looking for when I want to reverse a trend? It's either a strong 1-bar, 2-bar, or 3-bar reversal, but ideal, or more ideal, is I have a lower high or a failed equal high. So a failed equal high will be at the same level, a lower high is below that, and then most ideal is failed lower high with a 1-bar, 2-bar, 3-bar reversal at that lower high. So hopefully answers your question. Harley says, Chris, would you consider taking this, say, on a 1-hour chart? If that's where I saw the trigger, yeah, but the exhaustion bar was on the 4-hour time frame. So the exhaustion climax bar is on the 4-hour time frame, so that's where I was looking for my trigger. If I see the exhaustion or climax bar on the 4-hour time frame, then that's the one I'm looking for. But when I do see these bars, I'm going to be a seller. I'm going to sell that if I get my proper entry. Failed high, lower high, or 1-bar, 2-bar, 3 reversal. If I see any one of those three, I'm a seller. I'm going to sell that. So hopefully answers your question. Mario says, did you move take profit at any time when you saw this drastic sell-off? I did not, because I don't know how far this is going to run. And so, this thing could have stopped on my level. And so I already had more than 2.5 to 1 or 2.25 to 1 reward to risk. I don't want to be greedy in this one here, so I'd rather wait for a re-entry to get back in. I will cover a re-entry because the market did give me a re-entry signal, and I'll talk about how I use that. I even blogged about it last night saying what the re-entry signal was. So hopefully answers your question. I think I've answered your question, Shuaigi, so hopefully I did there. Lenny G says, do you ever use a trailing stop? Depends on the system, Lenny G. Depends on the system. Some of my systems have trailing stops. Some of them don't. If my system has it, yes. If my system doesn't, I do not. Every now and then, on a price action system, I will use a trailing stop, but generally that is in such a way that I've hit my first target. If I do, I bring my stop to break even plus cost, which is my spread. And then, we'll see how it goes from there. It just depends. There's various systems and various methods for trailing it, so it's based on the system. So I can't answer that specifically. But yes, there are times when I do. Shoigu says, you don't wait for that red candle to close? No, because by the time it closed, I'm much further away from my entry, and the entry's gone at that price. I've missed my more premium entry. So to me, the entry was not the reversal candle, but it was the failed lower high at a level that it already treated as resistance. That was my entry. So hopefully answers your question. Ganser says, could you have taken a short on the quadruple top that was going to form on the daily chart based on how price reacted to it? So triple top became quadruple top. Not my favorite. I generally don't like to trade levels just because it's a level. I generally like to trade a level with a trigger. So, sometimes the market can blow through levels. And you don't just want to trade a level because it's a level. It's much more powerful to trade a level in combination with a price action trigger or a reversal pattern. So trading levels just because they're levels is not premium. Trading a level with a price action trigger is far superior, because you have now confirmation from the market that the market is reacting or responding to that level in a way that supports your trade idea. Al says, when you commented on the doji earlier, it had an open and close that weren't the same. So wouldn't it be a spinning top? We're splitting hairs here, Al. Dojis don't have to have the exact same open and close. How do you define a doji? 1 pip, 2 pip, 3 pips? Where's the line in the sand? I personally don't give a shit, excuse my language, but I think we're splitting hairs if we say a doji is 1 point, 2 point, 3 points, 10 points, 20 points. It's all relative in the sense of, hey, if the candles are gigantic, You know, couldn't we allow a little room for buffer? So to me, I really don't care spinning top, you know, doji. To me, I was more interested in that. If the body was much larger than the wicks, then I'm more interested. But the wicks were much larger than the body. So splitting hairs here, what we call it. The name doesn't matter. It's the price action that matters. FX Boy, can you take a look on gold? Yeah, we're going to take a look at that then. I do want to show reentry. Hold on 1 second. Somebody's here to visit me. Sorry, that was my lovely girlfriend informing me that she's made lunch for me. So it's hard for me to resist her charms. All right, so yeah, we'll look at gold in just a second. Let me look at the reentries. BG says, what day is it? I'm not sure. If you're referring to the entry, it's 5-3. So hopefully I answers your question. Connie says, do you ever use Fibonacci? Rarely. And I generally don't feel like I need Fibonacci to be a profitable trader. I feel like if you learn how to read price action as is, if you learn how to find the proper signals, the proper price action triggers and setups, use proper R to R, use quantitative data to support your trade theory, you can become a very profitable trader. So hopefully answers your question. All right, last one's here. BG says, ignore my question. 5-3. Boyke says, which country is she from? She's from the United States. So hopefully answers your question. All right, great. Let's take a look at the reentry signal. I mean, in the reentry signal here, I blogged about it ahead of time. I don't know how much warning I need to give you guys, but okay. So the market has now failed at this top here. We got a lower high here, very strong sell-off. So the bulls or the bears are obviously in control. Then look what happens. The market closes, gaps down, which is pretty rare for the Dow to gap down over the weekend. It's only gapped down 3 or 4 times in the last 10 years, and every time it did, it was never really good for the Dow. So it gaps down, sells off very aggressively in the open. The gap was mostly from the Greek elections, which I talked about earlier. The Greek elections basically cast doubt that the Greece is going to be able to maintain the austerity package or that they're going to continue with the program, and that increases the probability that they're going to leave the Eurozone, which is obviously bad for the Euro. It's bad for risk. It's bad for global markets. If they default on their debt, some of the people on the hook are U.S. banks, so it's bad for the Dow as a whole. But then the market rejects, and look what happens. Inside bar starts to find some buyers and gets very close to filling the gap, and look what happens after it fills the gap. The actual candle that fills the gap, pin bar. Pin bar rejection on the gap fill here, and then the market pushes right into it here. So to me, I had a fantastic trigger to get back into the market here. We filled the gap, and then the market comes right up to the actual gap level itself. To me, this was a no-brainer trade. Again, I'll even show you. Let me show you something here. Take a look at yesterday's post. Right here. Scroll down to another notable signal. I said we would also like to note the Dow index formed a pin bar setup on the 4-hour time frame after closing the gap. So this is a possible short-term trading opportunity. I don't know how much more clear I can get to you on that one there. So it was, to me, an obvious signal. We have a nice candle close that fills the gap right at this level here. So how did I trade it? Very, very simple. Let me zoom in. Entry was literally on the close of this candle right here. Since I needed to put my stop above this level here, and I liked how this candle was just above it, I literally put my stop just above this candle right over here, a few points. Remember, the first thing you measure as a professional trader, risk first, profit second. So what does this do? It gives me a 35-point stop. Okay, I have a 35-point stop, means I need a minimum 70-point target. Well, where would that put me? 129.50. Is that achievable? Certainly. Now, here's the question. Does this look like a level that the market's going to be stopping? If this is where the reversal started or the pushback started, the most natural point for this market to go back to would be to the 0 point of where all this rejected. So 112.883. Very natural place. If this is where the buyers came back into the market should gravitate back towards this here before new buyers come back in. Buyers are less likely to come back into the market midway and more likely to come back at the point where they were successful in turning the market again. So this creates a natural gravity or magnet for the market. So to me, I said no brainer, have to set it here, set it back at the 0 point where this whole reversal started, and you can all see how the market responded. There you go. So very non-brainer trade. Again, I warned you about it ahead of time. Hopefully, for those of you who follow my blog, got into that one there. So any questions on that from a price action perspective, entry, stop, limit, the whole thing? Yes, no? Okay, fantastic. Rigodonis has got to go. Good webinar as always. I'll watch the rest later. Fantastic. Thanks for coming, Rigodonis. Good to see you again. Rigodonis, of course, member. Actually been making some really good trades lately, so congrats to him. Harley says, nope, good trade. Connie says, clear. Ganser says, nope, simple pin bar trade. Aviator, Spin Doctor, Harry Cook. Dry Desert says, stop loss. Dry Desert, I told you the stop loss. Just above this bar right over here. Right over there. 35-point stop, needed a minimum 70-point target. Ended up getting a lot more out of that, about 150-point target. So good 5-to-1 R on that one there. All right. Let's take a look at gold, because gold is making some incredibly interesting moves, and it's broken some key levels. I'm a long-term bull on gold. You all know this. I've been like this for a while, but short-term it's getting hammered. I've bought physical gold. I have physical silver sitting in a vault in Zurich. And so long-term, I'm bullish on gold. I see it going to 2,400 minimally in the next year or two. Very long-term bull. But the bottom line is short-term, it's getting hammered. I want to step out for the daily chart for a second, kind of show you something here, which was giving the illusion for the moment that gold was starting to bottom out. You know, this right here was starting to show some bottoming formation here. We have lower low, lower low, higher low with some pin bars showing some buying interest. Also a new stable relationship to the 20 MA, support, support, support. So gold was showing that it was showing some possibility of some warning signs, possible bottoming formation. But the interesting thing about it is that even though it produced a higher low, it failed to produce a higher high. So the bulls were not able to make new ground. In fact, if anything, it made a lower high. So until it makes a full higher high, the bottoming formation is not complete. Well, since then, it's now today produced a lower low, which is interesting to some degree because Greece, in the whole elections and the possibility that they're going to leave the Eurozone, and that they recently just mentioned today, hey, the previous austerity package is null and void. That should have been bullish for safe havens, which should have been gold, and instead gold sold off. So that's the interesting thing about it. Well, as I was watching this whole structure here, I just kept noticing, hey, gold is having a hard time making any new upside gains, producing new highs, and I said, what's going on here? I decided to step out and take a longer look at gold, and this is where I noticed something interesting. I went to the weekly time frame, and then I noticed, all of gold's upside gains were being capped by the 20 MA on the weekly time frame. 1, 2, 3, 4 rejections. In fact, if you look at this, look at the larger structure, swing high, lower high, failed to produce, and the lows here are the same. So instead of making a higher low and higher highs, it produced same lows and lower highs, telling us the medium structure is still bearish for gold. The thing you have to consider about gold is that there are a lot of people who are involved in gold, but they're involved in it on a much longer term perspective. They're involved in it in such a way that they're long-term buyers. Most of the people who are involved in gold as either an investor or holder of physical, they're looking at it from a long-term perspective. They believe in the long-term viability of gold, that it's going to minimally get back to 1900, 2000, and even higher, and for justifiably so. But so when they're looking at it from a longer-term perspective, they're not going to look at it from a 4-hour or daily charts to be making their decision, because they know they're going to be in this thing for a long period of time. So they're going to look at the weekly and monthly time frames. And if you look at it, that means that these weekly and monthly time frames are going to have some of the more dominating effects on gold in terms of how it plays out medium and long term. And from a technical perspective, the fact that it's sold off aggressively and then kept rejecting up 20 MA tells us that short term, the sellers are still stronger than the buyers. Until it produces a higher low and a higher high, the bulls have not taken control of the market. Now that we have taken out this short-term low, I'm expecting gold minimally to go to 79 and more than likely to 31 before you see buyers come back in and buy it. That's my speculation on this one here. That now that we've broken a critical low and are now about to produce our second week of bear closes, buyers are going to reconsider getting gold, probably not till 1579 or 1530 before they come back in. If I was going to rebuy gold on a physical perspective, I'll probably wait till 1530 before I get back in on it. So right now, we've broken a critical low. We've broken a low that hasn't been broken since early January, the second week of January this year. From a technical model perspective, that's going to put a lot of pressure on gold to the downside. So that's what I'm seeing in gold from a structural basis. Now, let's see, there's a couple comments on this here. Short term, there's always intraday trading opportunities on gold, both on the short and the long side. But my overall feeling is right now, downside pressure is remaining, and it will continue to remain. All right, Harley says, true, but when Greece defaults after next Sunday's election, gold should go through the roof. Possibly. I'm a believer that that's more likely to be true, but you got to understand, over the last 6 months, when risk events have happened, have come off, for example, QE2, problems in Greece, France, all these things that have come off recently, gold or Swiss franc intervention, in those events, gold should have gone through the roof, and instead they got hammered. In fact, what is interesting is that a few minutes before the announcement today about Greece, that the whole thing is null and void, the bailout and austerity measures are null and void, gold sold off very aggressively. So my guess is that it's probably the market manipulation, gold cartel, wanting to counteract any influences to speculate in gold. So they hammer the prices so it gives people less incentive to buy gold and think of it as a safe haven asset. The bottom line is that I don't think you'll change investors or people who own physical gold. I don't think you're going to change their point of view that gold is a safe haven investment. But the bottom line is short-term traders, it's going to influence their bias. So with that being said, I think I'm more towards your camp on that one, Harley. But the bottom line is I would still rather wait and get in at a level that the market has responded to before. So hopefully that answers your question. Smith says, Chris, on which time frame do you usually use the 20 MA? Because I've seen the H4 daily and weekly as well by you. When do you switch between the time frames, or it depends on the product thing? I use the 20 MA on any time frame. If I was someone who just traded the 1 minute time frame, I would still be using the 20 MA. So the 20 MA is potent and powerful on any time frame. So whatever time frame you want to trade it in relationship to price action, doesn't matter. It'll work on any time frame. You just have to be able to discover the patterns in relationship to it, and price has to show a propensity to relate to it. Once you have those things in place, doesn't matter what time frame. So hopefully that answers your question. I use them on any time frame. Whatever time frame I'm using, I use it. So hopefully I answer your question. Fernando says, what will it take, Chris, for you to sell your physical gold? What would it take for me to sell my physical gold? It would not be a price. It would have to be, I'm convinced that gold's relationship to being a safe haven asset is no longer valid, that people no longer look at gold as a hedge against risk, a hedge against failed economic policies, and a hedge against failed governments. Remember, gold has never been a hedge against risk or a safe haven in that particular way. Gold has been a hedge against bad governments, bad economic policies, and bad financial management. So that's what gold's mostly been a hedge as, not necessarily against risk. So until I see that that relationship changes, I'm not interested in selling my physical gold or silver. There's a lot of other things you have to consider that, but it wouldn't be a number. It would be that those relationships change. You also got to remember, historically, all fiat currencies have failed, and all reserve currencies have eventually lost their status. And when that happens, where does everybody turn to? Safe haven assets and gold. And gold eventually comes to a one-to-one value with current paper money. So to me, I don't see any, until all those relationships changes, which I doubt will happen, I'm going to keep holding my physical gold. So hopefully I answered your question. Drydozer says, would you be trading gold if you had a typical retail broker spread? Depends. From what I understand, if I remember correctly, retail spreads on gold are about 40 to 50 cents. I'm not too excited about that. So, I mean, I probably would, but I would have to adjust my strategy to factor in the larger spread. So it's not my favorite. So I would just have to be a little bit more cautious about my trades in the sense of I need to factor in that spread and make sure I have a much larger target to compensate for that. You know, I have a test account that I use, and in that test account, you know, because I'm testing various strategies and things like that, you know, it's a great testing ground to see if the strategies work, if they fail, if the algorithms work, if they fail. And when I do that, you know, sometimes I'm executing that on gold, but I'm not really executing that in relationship to the spread. I'm executing it more based on the strategy because I want to test how the strategy performs as a whole. So hopefully that answers your question. Harley says, true, but ignore Greece for a few months. Soon will be Judgment Day. I totally agree with you. You know, you can only Band-Aid and patch up the problems for so long before eventually things have to come out. You know, I can only take so many pills to deal with my thing. Eventually, I have to deal with the problem at its root. And I think the bottom line is Greece is not really, it can't match economically with France and Germany and Spain. It's just they have different economic policies. They totally cook their books. I think eventually Greece is going to say, hey, we don't want to be debt slaves to Germany and everybody else. Let's run our own country again. So that's what I see happening eventually. Train Trace says, will the euro move up if Greece defaults? Depends on how global investors respond to it. My guess is they would more lean to that being more bearish for the euro than being bullish for the euro, because that weakens the eurozone. It puts a lot of the European banks at risk, and they're going to have to fill the bill. And so I think it's more bearish for the euro than bullish. But I would like to say the Chinese have been buyers of the euro. And so because they have been buyers of the euro, you know, if they're propping up the euro, why do you think the euro's been stuck in a 400 pip, 300 pip range for the last few months? Because it's been manipulated by sovereign entities trying to prop up and reduce speculation in the euro. So with that being said, you never know. The Chinese could always come in and prop it back up, but unlikely. My lean is towards more bearish for euro than bullish. Jim AZ3 says, Chris, just joined your course, loving it. Would like to hear a little bit about when when starting out, in particular, turning 3K to 80K, then a loss of 60K. You have spoken prior webinars, what and how you were trading, how did things go so wrong? Yeah, maybe I can do a webinar about that in the near future. You know, spend 30 minutes talking about it, how I reacted to it, how I dealt with it. I have talked about it a lot, but maybe I can really get into that in detail. So I don't think it's nosy. You know, I think it's we have to look at the downside of people's experiences in their trading careers as much as the upside. If you don't, then you're going to be missing the patterns that are the causes of your mistakes. You're going to be missing the variables that were part of your experience, and you're missing the opportunity to extract information from that can help fuel your growth. So hopefully that answers your question, but I definitely think it's a valuable thing to talk about. Director says, look at Spain, not Greece. I think they're both. I think every one of those countries, Spain, Greece, Ireland, Portugal, Italy, they're all problems for the euro. Spain is a bigger problem. They're 4 times the size of Greece, and far more banks are on the hook for Spain than they are Greece, so it's a big issue. Spin Doctor says, would you trade a potential bounce in the euro near this level? I'm not too excited about buying euros right now. As a whole, I'd rather be more sellers of euros than buyers. If I got a really good price action trigger from yesterday's lows, I would consider it. But based on the news right now, I'd rather be selling euro than buying euro. So hopefully answers your question. Orville Wright says, what website can I go to get a description of your course? Sure thing. Here's a link to the exact course. So price action course. So hopefully answers your question. Spin Doctor says, so I might sell a bounce in the euro. I would sell, not necessarily a bounce, I'd look for a rally and then sell the rally, depending upon the situation. So hopefully answers your question. Last time I shorted euro was about just under 132, and that worked out pretty good. So yeah, I'd rather be selling than buying. The buy-ups have been very less aggressive, and the sell-offs have been much more aggressive. That's where I would be more leaning towards. So hopefully answer your question. Okay, I need to be wrapping it up right now because I promised Maud I would go a full hour, and that would be it. Just real briefly to give you the most recent link I wrote on the Exhaustion, Climax, and trading bars. That's right over there. So hopefully you guys can check that out. All right, fantastic. So that's pretty much it. I need to wrap it up, but I want to thank you all very much for coming. Thank you guys for the questions participation. Questions always help the learning process. You guys are great to work with. So thank you all for coming. This webinar was recorded, so make sure to come back and view it again and again and again so you can go over the details. If you have any questions about what we do, make sure to check us out at secondskiesforex.com. Also, make sure to check out my blog where I often post trade alerts once a day after New York close. And also my Facebook account. I'm on Facebook, very active on it, posting global market commentary, trade setups, all kinds of things. So there's my Facebook account right over there. Please join me on Facebook. Other than that, I bid you all adieu. Good luck trading, and I'll see you guys next week. Take care, everyone.